Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you how I use options in order to make monthly income consistently over a certain period of time. Now, this can be done using almost any single portfolio. The choice is going to be yours. Now, if you're new to options, you definitely want to pay very close attention to this video because as you may know by now, all that glistens may not be gold. So, welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you the monthly income that I made during the month of February. I'm going to show you the stocks that I use in order to achieve these results. And I'm also going to go through the strategies that were used in order to get these results. Now, before we head over into my options dashboard, my options tracker, I need you guys to do yourself two favors. Favor number one, always make sure you do your own due diligence before investing. And favor number two, always make sure you have an exit strategy before entering any options contract. That being said, let's go ahead and jump into the options tracker in order for us to see what the results were for February. Okay, so here we are on the options tracker, and I'm going to continue with the cadence of this video. We're going to do a quick review of the January results. We're going to focus on the results and the strategies that were used throughout February in order to achieve a result. And then I'm going to show you how the next month has already began. So once again, welcome to Investment Gains. Okay, so here we are on January, and I'm just going to do a quick overview. I do have a video of the results for January, so go ahead and check that video out. So as you can see, for the first period in January, we made $1,000. For the second period, we did have a loss of $129, and then closing off January, we had a gain again of $648. Now the total overall for January was about 367. Now the reason it was 367 is because I was able to exit some options, which is going to be this one right here, which was Rigetti Computing. Now with the Rigetti Computing, I did lose out about, let's see how much that is, $1,196, but I was still able to end up January with positive of 367. So let's go ahead and see how February went. Now, for those of you that are new to this channel, I'm going to show you this simple options dashboard. And if this helps you guys in any way and you're willing to support the channel, then just go ahead and just purchase this options tracker. It's going to be in the description below. Now, firstly, we have what's called open. This is going to represent the date that the strategies are being open. Next column, we have the options expiration. This is going to be the expiration date that I chose. Right next to that is going to be the closing date. Although I may choose an expiration date of close right here, I may decide to go ahead and close before, depends on the status of the market. The next column, it shows you the days to expiration. The next one is a very important one, which represents the ticker symbol that I'm using. And then right after that, you're going to see action. The action represents the strategies I'm going to be using. So CC in this case is going to mean covered call, and PMCC right here means poor man's covered call. Now, another very important column is going to be this one that says strike. This represents the strike prices that I chose in order to receive those results. And then right after that, you're going to see the quantity. The quantity is the amount of contracts that I chose to sell. Now, next to that, you're going to see filled. Although I chose the quantities, I also put the price at which I'm filled at. Not any price you decide to choose means you're going to get filled at that price. I wanted to make sure I highlighted that column. Over here, you're going to see closed. Now, close, once again, is, like I said just a couple of seconds before, once I choose a strike date, I don't necessarily wait until the option expires in order to get out of the contract. I may go ahead and close it off manually. Once again, that's going to depend on the nature of the market. The next column is going to be collateral. The collateral is going to be the total amount of money that I have invested in that particular stock. So for instance, this one here is $45.84 and I'm able to do 4 contracts. So in order for you to get the average cost, all you need to do is divide $45.84 by 400 contracts, and that should give you around, I think, $11.46 or thereabouts. The next column is the P&L, which is a very important column once again. The P&L tells you your net gains. So once again, although we choose a date of expiration, I may go in and pay in order to close out the strategy. And then whatever I have left over, that's my actual net profit. And of course, this is before taxes. This column, the next one, is one I really, really like, which is the ROC, which is your return on capital. And that here is represented as a percentage. What I like to do in my personal portfolio is get a certain percentage of return, which is above 1% and below 3%. And that also depends on what the market is giving you. If the market is going through earnings, then these percentages may be a bit higher. If there's no earnings, it may even jump down to, like, let's say down here, 0.73. But every gain is a good gain, and it adds up to make sure at the end of it all, you may come up with a positive figure. Now, this column right here is just notes I made to myself just as reminders. So let's go ahead and get into February and see what happened. So you guys know that on this channel, I like to use the exact same stocks. And the reason for that is because I like to do my own due diligence before investing. And I research a handful of stocks that I want to trade in my portfolio throughout the year. So those stocks I used was RGTI, which is Rigetti Computing, IonQ, which is Quantum, Mara Holdings, which is Marathon Holdings, AMD, Advanced Micro, MU, Micron. Now these three here, I'm running the covered call option strategies, which means I own these shares outright. With AMD and MU, I'm running a PMCC on it, or poor man's covered call, which means I actually went to purchase Leaps option and then I started to sell covered calls. The price I got into the Leaps option is what's represented here in the collateral column. So this is going to be different to these here. These here could be an average cost, but this one is going to be average price per leap. Now below that, you're going to see SMCI. Then you're going to see Sound AI. Then we have QUBT. We're going to come back to this in a second. We have AI, which is C3AI, and then once again Sound. Now, the reason why some of these may be here twice is because the volatility of the market. So, for instance, the market has been dropping drastically in February. So, when that happens, that gives an option seller the ability to go ahead and close out the contracts way before expiration. Now, if you're able to do that, then you could go ahead and sell additional covered calls and make additional income. Once again, if you guys don't know, I am what's known as an options income seller. That means I sell options in order to generate consistent income. And that income I use to do either personal stuff or I buy dividend stocks. And the rest of the money I leave in the portfolio in order for the portfolio to get consistent growth. So with the fill column right here, you're going to see I make different amounts. Now, what I really want to highlight to you guys, especially if you're new to options trading, is the premium. Do not get too caught up in the amount of premium. I do realize that if you spend almost $5,000 and you receive $25 per contract, it does not look like a lot of money. However, the whole point of being an income option seller is to make benefits in the short term while you're still receiving benefits in the long term. So $25 here multiplied by 4 contracts, that's going to give you an income of $100. If you were to close it out for $5 per contract, your total you're going to pay is going to be $20. And that's what makes me receive a net of $80. Now, that $80 represents only 1.75% of my total amount of money invested. Now, 1.75 once again, plus this 25 here does not look like a lot of money. But if you were to get 1.5% consistently while not taking much risk, I mean, your portfolio is going to grow exponentially within 6 months to a year. And that's a guarantee. Now, for IonQ, you guys could see the benefits right here, $80, $90, $60, etc. So for that period of time, I received a positive of $676. That's for the first period in January. Now, I did make a slight loss, and that loss was on QUBT. Now, QUBT, I decided to get out of the contract when the stock price went to $10 per share. Now, as you can see here, my overall cost is $4,600. when I actually sold this at $10 per share, I actually made a loss of $150 per contract. Now, $150 loss is not that much, and let me go ahead and show you why. $150 per contract multiplied by the 4 contracts gave me an overall loss of $600. Now, this is how you mitigate your returns and you mitigate your losses. Because I was able to sell consistent options on QBT and I was able to receive money, that allowed me to reduce my losses. So if you see right here, the overall loss was going to be $600. And then I subtracted the premiums that I received over the couple of weeks that I've been selling covered calls, and that brought down my loss to $300, which is not bad at all. So when you're an options income seller, every time you receive premium, that helps, one, to reduce your average cost, and it also helps to mitigate the overall risk if you decided to exit the position. Now, the first week, as I said, was 676. Let's go ahead and go to the second period. Now, with the second period, the red is going to highlight the stocks that I picked up. So because I got out of QUBT, I decided to double down on some other positions because, as you guys know, the February market, the stock market had a really, really nice pullback. So the red highlights stocks that I picked up. And once again, the exact same stocks and the exact same strategies. Now, when you're becoming an income option seller, this is a very boring strategy. The reason is because you do the exact same strategies. If you're smart, you're going to do the exact same stocks because you get to learn the stocks and you know a lot about the stocks. Do you make money? Yes, you do. The reason why it's boring is because you do the exact same strategy, the exact same stocks. You make small amounts of money. But what really gets you and what really magnifies your portfolio is the consistency of your portfolio growing over time because you continually keep making income. So for the second period, I was able to generate $938. So now we are at 938 positive plus the 676. Not to forget the 295 that we lost exiting QUBT. Now let's go ahead and go down to the third period. Now the third period is extremely short because during the second week of February, my God, the market just literally just dropped down. Now, like I mentioned, when the market drops down so much, your covered calls are going to have very high gains very quickly. So, on my personal risk tolerance and based on my personal preferences, I like to close all my options when I have a 75% or more gain. So, once I was able to do that, then I was able to go ahead again and sell additional options in order for me to make additional premium. So, for the third period, because of the volatility of the market, I was able to sell just these few contracts. I was able to generate $684 for the third week. So let's go ahead and see how much I made overall for February. So overall, I made a total of $2,298. Now that was the gross. Now what I did, I went ahead and I subtracted the loss of the 295, and my total overall gain for February was $2,000. Now, the reason why I make this video is to show you that it doesn't matter whether the market is going up or the market is going down. If you're selling options, you're still able to generate some kind of consistent income. Every single month is not going to be the same. You're going to make a small amount of money one month. The next month, you're going to make a huge amount of money. And it fluctuates similar to the market. But remember, we are investors. I always say, welcome investors and future investors. What we're trying to do on this channel is to make short-term gains while we focus on those long-term strategies. Now, I'm going to go ahead and I'm going to go into March to show you guys how March has started off for me. Now, if you guys have any questions about the option strategies that I use, about the stocks that I use, about the percentage returns, how to close an option, how to open an option, feel free to let me know in the comments below. Now, let's go ahead to March and see how March has started off. All right, so here we are in March, and once again, the exact same strategies, the exact same stocks, small amount of premium, which will end up adding up in the long run. Now, it does show here overall gain of 410, and we're not going to pay attention to that yet because I still have some positions that still hasn't been filled yet. Now, since I'm on March, I want to show you guys something. So I did close off Rigetti Computing about on the 2 days before now, and I did not open a new position. The reason why I did not open a new position is because the premium I'm receiving, I just don't think it's worth it. Now, this is also an option you have. No pun intended. You don't need to continuously keep selling options if the right strike prices or the right premium you're going to be receiving works for you. Have a little patience until the market gives you something that you could actually benefit from, and then that is going to be the opportunity for you to strike. So that is it for today's video. I just really wanted to show you guys that if you guys want to, if you guys make a choice to sell options in order to generate consistent income, there are a few strategies that can be used. Now, when you sell in options in order to generate income, it does not matter whether the market is going up or the market is going down. You need to focus on your whole purpose of your portfolio, which is generate income. So all you need to do, depending on the direction of the market, you just simply change your strategies. You get the small gains, which is going to be your small premiums, without taking lots of risk in order for it to last in the long term. Now, go ahead, like the video, subscribe to the channel. And if there's anyone out there, especially those new option traders that can benefit from this video, then feel free to share it with them. Let's help as many as we can. And until the next video, keep pushing your investments.